Welcome everyone to our live streaming. I am Aditya, your host for today, and we will be talking about second chapter of our course. Right. So we were discussing about all about operators, how they make positions, what are their costs. So we will understand today, right? We will understand how they make the covert entry. We will master the covert entry and go through. For those who don't know me, I do research based on fundamental analysis, and I had the privilege of managing 150 plus crore rupees of portfolio till date, and I have been managing a lot of wealth from my starting of the career. And from last 7 8 years, I have gained a lot of experience in equity markets, and I have understood working in the securities market how the operators work and what are the roles they are playing. So I will be your guide throughout this series of this course. The series is designed to revive your investment accounts, turn losses into profits, and achieve sustained and stable gains. Now, for those who have submitted yesterday assignment to our assistant, please reply with one. If you haven't submitted the assignment, please reply to. So as of now, if I am looking what I have discussed with my assistant, there were 25 number of assignments yesterday which was submitted, which I received from my assistant, right? And the majority of you did an excellent job. A very good clap for them. The majority of you did very good in that. You were able to identify the positions of main fund. You were able to identify the like where the main funds are making the positions and the cost of main funds. Very good to see our viewers, our all the clients are making doing an excellent job. Only a few didn't submit it. Weren't yesterday insight enlightening? Haven't they overturned your previous misconception about stock trading? The purpose of assignment is to help you consolidate whatever you have learned, right? So we have been talking a lot about operators positions, how they enter into the market, how to identify them through the bullish channels, and we have given you the assignment based on that. So if you have done that, it's really well. The purpose was to make you understand through your practical understanding that you are able to grasp the essence of that, right? So I hope many of you who have submitted the assignment has done an excellent job, and for those who haven't submitted, I request them to go again, think about it, and submit your assignment as soon as possible. We will be having our second assignment today also. So it will be a series of assignments for you where you are also getting a work to do, a practical understanding of what we are teaching, right? So the purpose of assignment was to help you consolidate what you have learned throughout this session. Of course, I can lead you to financial success, but you need to understand my strategies and bring into the practicality. This is how you can maximize your understanding from each lessons, right? So once again, please have your pen and paper ready to take notes on what I am about to share. All right, once again, welcome to the live broadcast. Let's officially begin today's lesson. So let's first review yesterday content. Yesterday we talked about how to identify main funds in the market and determine their cost of establishing position. Now I am going to test you what we look for, determine if there are main funds involved. Please type your actions in the comment section. Today I am going to test you guys. Right? What do we look for to determine if there are main funds involved in a stock? So just write down your answers. Please type your answers in the comment section. Next, how do we determine the cost of a main fund position building, right? Right. So next we have discussed about how do we determine the cost of main fund position building. Again, type your answers in the comments section. I see that everyone in the comment section is doing well. So most of you have grasped the essence of the session. I guess most of you are learning. And now let's dive into the today's main topic: how to establish positions at the bottom in a covert manner. So this will be the context we will be discussing. Right. Today we will be discussing how we can establish position at the bottom in a covert manner and maximize our returns for all of us. So type covert entry, establish position at the bottom in a covert manner, right? So what is covert entry? What do you mean by covert entry? Can anyone tell me what do you mean by covert entry? So covert entry is nothing. It's basically we need to establish position at the bottom in a covert manner, right? In a hidden manner that nobody is able to identify us. We are just making the positions and building our positions because we have our first hand information from the sources, right? Who have the first hand information from the sources? Does retailer have the information? No, the retailer doesn't have the information. The operators, the institutions have the informations where they can make a covert entry. So we will understand how they are building up their covert entry and how we can follow them. So we are able to gain grasp of this essence and understand and build our profitability going with the operators in a stock. Yesterday, we discussed the biggest difference between the main force and retail investors, which is continuity. Right, continuity on your screens. Right. We in the previous lesson, if you know, and if you are aware that we have mentioned many times that consecutive positive candles indicate the activity of main force. So let me take you through the previous course to make you understand the presence of continuity, right? So this was the performance of operators, right? This was the performance of operators. I was just making a very detailed idea how to identify how what do you mean by continuity. So just look at this big bullish line. So right, this is a big bullish line I am drawing for you. So this is a big bullish line we are having as of now, right? So just look at it. This big bullish line can be created can be created by the retailers too, because they can create big bullish line at once, right? The market sentiment can build up and they can create big bullish line at once. And for this too, for this part, this can also be created by retailers as well, right? So it is not following a continuous big bullish line. It can be created by the retailers. Now, if you understand what do we mean by continuity, just look at these 3 points, right? Just look at these 3 points. What do we mean? What it is showing? We have continuous big positive line. Secondly, we have continuous daily limit line, right? And thirdly, we have continuous, right? So we have continuous big positive line, continuous daily limit, and continuous rise in it. So these three are showing the continuity part, right? These three are showing the continuity part where you can have assurance that if this three occurs, the continuous big positive line or the continuous daily limit is increasing on a regular basis, right? Just look at here. So we will understand the presence of main fund. So for those who are not clear, we have understood now the concept of continuity, right? So we have understood the concept of continuity. So just let me take you through. So we have discussed about all these things, right? So the leading small bullish is a lurking to build position. We will be talking about this section, right? We will be talking about this section. Today we will be covering all the covert entries we can see and make in the stock. Today I will mainly teach you how leading institutions such as securities, firms and fund companies operate in creating leading stocks, right? So we will understand how the securities firm, we know about the securities firm, the brokerage firms. There are many securities firm in India too, like Motilal Oswal, Kotak Securities, SDFC Securities, Axis Securities. So these are the securities firm and fund companies. We know about the fund companies also, the mutual fund companies and the SDFC mutual funds and Kotak mutual fund. These are the major mutual funds in India, right? So we will understand how leading institutions such as securities firm and fund companies operate in creating a leading stock. Having worked in security industries, I have a clear understanding how securities institution conduct trading and how listed company use news to establish position, right? So I will make you understand very clearly that how they create position and how they use news to establish position. Having worked in the securities companies from last many years, I have understood and grasped the formula where I will teach you in a very proper way how this securities company, how this funds company operate and make profit, make money in the market, right? Before the news comes out in the market. So just be sure I will be teaching you in very brief whatever you are waiting for. And by the end of the today's session, we have already discussed about that. By the end of the today's session, you will be able to pick stocks very independently and you will be having a lot of idea about stocks. In just two sessions you will be having many ideas how operators are operating the stock, how they are making their positions, at what cost they are making their position, what is the target price. So usually operators have a target price of 3 to 5x. So this is the target price of operators, right? So I will be discussing about all of the things and making you understand in a very proper way. So, having worked in securities industries, I have a clear understanding how security institutions conduct trading and how listed companies use news to establish position. I will share all these insights with you, so be ready for it. Next, I will show how to leverage the information gap about the main force to establish position covertly, right? So this is the main thing we were talking about. So how you will understand, how you leverage the information gap about the main force to establish position covertly. Type small positive candlestick covert entry using small positive candlestick to establish positions covertly on your screen. Everyone please type it. Now let's move on to the individual stock demonstration. So just have a look on individual stock demonstration now. So we will understand this part through an example. Just have a look. So we will be going through our TradingView platform to understand more clearly, right? So we will be having an example of Greatex Corporate Service Limited, right? So we'll just delete this up to make you more clear. So just have an understanding that what we were explaining it yesterday. So just have an understanding what we were explaining yesterday. Now have a look. So what we look to identify main types, right? What do we look to identify main type? Please type your answer on the screen. First, we need to follow the producer, right? First, we need to follow the producer. Go to the stock, find the presence. So what we need to do, we need to go to the stock and find the presence of main funds, right? So we need to find the presence of main funds. So can you look for the presence of main funds? Right? Can you look the presence of main funds? So just look at here why it is increasing from this level at around the 190 200 level to 600 level, right? Why it has increased from this level to this level? Just have let me know why it is increasing. So any guesses? Right? So there can be two reasons where the stock can go from 200 to 400. What could be the reason? Fund might give boost and policy pushes it, right? The fund might get boost from the news, the fundamentals, the financials, and secondly, the policy might pushes it, right? So, so just have a look, right? So we will make you understand each and everything very clearly to you to make you grasp the essence of this session. Don't worry about it. We will make you understand each and everything, right? Because we are here to teach you everything. So just have a look. So I will indicate the volume in it, right? So I'll bring the volume data to make you understand about the presence of main fund. So just have a look on it, right? I will make it more closer, right? Here, yeah. So I am making it more closer so that you are able to understand the presence of volume and the presence of main fund. So just have a look. It's increasing from this. The year is starting. Just have a look. Like last year in the month of December, the main funds have started emptying, isn't it? Is main fund making positions here? Let me know. Right from this point, from 200 to 400, is there any presence of main fund? So just have a zoom on it. Just look. There is a clear sign of main fund presence in it, right? So there is a clear sign of main fund presence, and here too. So just have a look from this 200 to 400. Is there any sign of main funds? Yes, we can see the sign of main funds, right? We can see the sign of main funds because the volume is increasing a lot and it is in bulk manner, right? It is in hippie manner. So the volume is continuously making good highs. So just look at the volumes. I will make you a clear understanding, right? So just look at the volume. The volume was very low previously. The volume was very low previously. I will just make volume was very low, and now the volume has come to the average. It's very high. It's almost 5 to 10 times as of now. Right, the volume has increased a lot, and here the main funds have started making position from this level at 200, and it has pushed the stock to 400. So this is this will be the position size. Just look at it till here to here. The main funds have started making position and pushing the stock to a greater height. So just we will mark this up, right, to make you more clear. So just have a look on it, right? So from this point, right, from this point to this point, so main funds have made their position, right? So main funds have made their position. So this is the positions of main fund. So just remember what is the position of the main fund. This is the position of the main funds we are having, we are looking currently. Now just have a look. If we look down towards the volume has increased many folds, right? The volume has increased many fold. So we can confirm the presence of main funds and the cost of main funds too. So just have a look. If we calculate from this position to this, so exactly we are able to see the presence of main funds here at this point, right? So exactly we are able to see the presence of main funds at this point. So this is the point where the main funds have started building up their position and have pushed the stock to the level of 400, right? And this is the position where we can see the volume increment, and there is a continuous volume increment. It's in a very bulk manner, and it has created a position for main fund and pushed the stock towards the level of 400. Now just have a look. So we can see there has been a covert entry, and there has been a continuous bullish candle appearing, right? So now just have a look on it. So we should understand why we track main funds. Like why understanding the main fund is crucial. We track only main funds, like major funds, operators, instead of retailers, because retailers lack information. Retailers lacks vision, right? So because big funds have the research team and information to make strategic move. If we align our strategies with there, we can strategically profit too. We understand that the operators in the market, right, the major operators, the institutions have the information. So what they do, if we follow them, if we understand their strategy, we can be aligning them with their strategies, and we can potentially profit too, right? So we were discussing about Grexter Corporate Limited. So we have often talking about the rat positioning. What do you mean by rat positioning? So rat positioning refers to insider information that give main funds and institutions a significant advantage, right? So rat positioning means that institutions are having a significant advantage. Their entities often acquire first-hand information. So just look at it. They are acquiring the first-hand information before another rally is coming up, right? So this we can tell as a rat positioning. These entities often acquire first-hand information, enabling them to act before the broader market reacts. So just have understanding. The main funds have started making position at this point, and at this point if we see it has started increasing again, and it was again increasing, right? It is consolidating at this point as of now, right? So it has started increasing here, and just look at it, it has gone to the level of 600. So they are making positions, the main funds are making positions from the level of 200 only. So their cost is this, right? Their cost is from 200 to 400. So they have started building position at 190, 200, and they have pushed the stock to 400. So this is their cost. So they will be obviously pushing the stock to more high. So just because it's in a very, it's a very it's a very hippie manner, right? The sequence of information flow starts from the main fund. So operators, main funds get the first hand information, who gets the insider news first, and they make their positions accordingly. We have to understand this very clearly. The operators, the main funds are getting the first hand information, and they start building up their position in the stock, right? And following that, the listed companies use this information in their strategies. So when the listed companies are also there who are using their strategies, right, once the main fund establish their position, they often influence the market, leading to retailers being washed out. So just have a look. When the main funds have established their position, they are trying to wash out the retailers from this position, right? They are consolidating and washing out the retailers. And just have a look, can you identify the presence of main funds after this, right? Can you identify the presence of main funds after this? No, we cannot identify the presence of main funds. We can see the presence of continuous bullish candle appearing here, but the volume is not supporting it, right? The volume is not supporting clearly. Just have a look, the volume is not supporting clearly, but there is a continuous bullish sign. So who is this? Who is creating this continuous bullish line? So just let me understand, who is creating this continuous bullish line? It's a big investors, right? The big investors are creating this bullish line. The big players in the markets are creating this bullish line for a short term. It's not the operators. It's not the operators. Operators presence are here, and big investors presence are here. So I'll just note it down for you to make you a clear understanding, right? So just I will make sure you are understanding. Operators are present here. So operators are present here at this level, and at this level, just look at this level, right? And this is the, and what is this? This is the positions of operator, cost of operator, right? So just add this up, cost of operator. Cost of operator, right? Cost of operator, what do you mean by cost of operator? The position size which they are making, right? So just make this out. So this is the cost of operator, and these operators are present at this level because I will just make sure, because there is a hip, because there is a bulk volume appearing continuously, right? And just look at it, there is no bulk volume, so it is majorly because of some big investors who are entering into the market and making the market move continuously, right? We can see the presence of continuous big bullish line, but the volume are not appearing, so we cannot confirm the presence of operators here, but big investors are present. So just write that down about the big investors, right? So just write that down about the presence of big investor here. Big investors are present. So big investors are present at here at this position where it is pushing the market. So just look at it. Here the big position, big investors are present, right? And from this level to this level, big investors are present. And here the volume is also not in a bulky manner, so we cannot confirm the presence of pain fund. So here big investors are present who are pushing the markets, right? Along with, we'll just write along with operators. So here position have been made by big investors, but not for the operators. Operators are already making position at 190 to 190 level to this level. But here, if we have a look, just be clear about that. We are making positions, right? We are making positions at this level. Big investors are making position at this level, and where we can benefit from it, we can benefit if the big investors are making positions still here. If they have pushed the stock price to 500, still we can get profitable. The retailers can still be profitable by making up the 10 to 20% of the returns. If it reaches the 600 mark, still we can make the profit. How we will make the profit? We will make the profit once the market sentiment is very positive, once we get the news about the big investors entering into the market. So then we will have a very clear idea, right? We will have a very clear idea why it is increasing continuously, right? So just have a look. If even if we get the idea about that, it will be increasing in a very continuous manner. So this is the thing we have seen, why we as a retailer can make money by the information we have as of now, right? So does retailer have the research? Just let me know, does retailer have the research on it? The retailers doesn't have the research. The operators, the brokers, and the institutions, the big investors have a good research team. So that's why they are making the profit. So they are making the profit till this level, and the retailers will push the stock more after taking the new sentiment, and they will push the stock to the level of the. So just we'll add this up and write it a very clear way. Just have a look. Right. So here, if we write, operators are making how much? Operators usually go for 3 to 5x returns, right? 3 to 5x returns. Operators usually go for 3 to 5x return, which they are might be getting at the level of 600, and they are making an exit. So they are having a very good positivity, whereas big investors are going for 2x returns. So big investors usually go for 2x returns, operator usually go for 3 to 5x return, and retail investors can also profit from it. Retailers, right? Retailers can also make profit by 10 to 20% by using the news gap we have. So operators usually go for 3 to 5x returns, whereas big investors are going to 2x returns, right? 2x return. So just I will make this returns right here. I will put the n because it was wrong. 2x return. Retailers can also make profit by 10 to 15%. So these are the things which we have to look for, all of the things, right? So main funds aim for large gains. Just look at it. Main funds give for large, and they are entering at 200 and might be exiting at 600. So Main firm usually exit for the large gains, typically 3 to 5x of their investment for whatever they have made. For instance, if they have entered at 190 to 200, the target could be around 600 level. This means their strategy revolves around the long term holding until they achieve their expected returns. So what are the big investors approach? Big investors approach, talking about big investors approach, are taking an entry at the level of 300. So just look at it, this is the big investor approach, right? So then if they have entered at 300, they aim for a target of around 600. So this is the level where big investor will be having a target. Now they align their strategy with significant market movement, aiming substantially but high, slightly shorter term profit. So they may be aligning with the market movement, but they will be having a shorter term profit compared to the main funds. Retailers position, so just look at the retailer position. Retailers usually enter much later in the instance. So suppose retailers are entering at 500, by the time market reaches 600, they can only secure 10 to 20% of profit, right, which is not much, but still they are making the profit. This is because they are leveraging short term market sentiment and small bullish candlestick to guide the decision. Candlestick inside, if you look at the small bullish candlestick signals an entry opportunity for retailers. By riding the wave of market emotion, retailers can aim for a modest profit of around 10 to 20%. The key, what is the key, right? What the key takeaway here is to understand whether you is where you stand in the market cycle. The main funds aim for massive returns like 3 to 5x return. If we see, big investors aim to double their portfolio, and retailers capitalize on short term emotions for smaller gains, right? And recognizing these dynamics help you align with your strategy with realistic target. So this is the thing which we have make you understood. So now just have a look, right? So what is happening here, we will be explaining you with some PPT. So just have a look on PPT for hours, right? So just go to the PPT. So just have a look on PPT what's happening here, right? So in terms of PPT, if we see, right, just look at here. So what was pushing the market, right? The funding drivers pushing the market, the favorable policies are pushing the market. Market push mode is driven by funding drive and the favorable policies. But we understand what's happening here, right? Just look at the levels we are trying to make you understand. So here is having a burnout, and the continuity is being shown from this level to this level. So continuity is present, right? The continuity is present from this level to this level. So just have a look, it is increasing very continuously. So the continuity is being maintained, and it confirms the presence of main force. So main force have entered here, right? The continuity, so it confirms the presence of main funds in this position. If you look at the volume, right, it's a volume, it's a lot, it was in bulky manner. So look at this volume, it's in bulky manner, right? It's in bulky manner, and it's a heap amount. So it's also a heap amount, it's a very bulk, and it's having a lot of volume in a continuous increase. Just look at this level, it's the volumes are very low, the volumes are very low, and suddenly the volume has increased to this level. So this is the spike we are seeing here. The volume was very low, just look at this level, and now the volume has just shoot up and maintaining its level till many times. So the volume has been maintained till many times. So it confirms the presence of main funds. So they have the presence of main funds, and it is a heap amount. So it confirms the presence of continuity also at this level. From, suppose we mark at A to P. So this is the presence of main funds. From A to B, we can confirm the presence of main fund, and this is also the cost for the main fund. So I hope you are getting a clear idea about it, what you are having as a main fund, right? So talking about, it started increasing, it's making a very well pattern, and it's showing the continuity. The continuity we have talked, continuity creates when there is a continuous increase. So there is look have a continuous increase, right? So it's a continuously increasing and it shows the presence of main fund. So it's have a presence of main fund too. And if we talk in terms of cost, the positioning size, we can confirm the presence of main funds. So this is the point we were talking about. We were trying to make you understand how we can understand the presence of main fund, because the volume has just shoot up to many levels. So search to get volumes have been shoot up by 10 to 20x, right? So volume is creating a very good. So talking about funding, right? We were talking about funding drive. We were talking about the market push mode. So what are the two modes of market which can be increased? So first is the funding, if we see the funding drive, and second we have a favorable policies promote. So firstly the market push come from the funding, which is done by the operators, main funds and all, right? Retailers can only create a single bullish candlestick. We have talked about it, and we have talked about it. For the continuous increase to come, there should be the presence of main funds, right? So there should be a presence of main funds. If we talk about the favorable policies, just have a look. They should have favorable policies too, to maintain the growth in it. So just have a look. What is the difference between main investors and retail investors? Talking about main investors, it's the operators, right? Operators. Who are the main investors? Operators and big funds, big investors. So we'll just indicate that big investors, operator, big investors are the main investors in the market, and the retail investors, the securities companies, operators, the big investors are the main investor, and there are second investors which we call as the retail investors. So just have a look. If we talk about the substantial difference, retail investors and main force. So if we talk about the research team, they have a very limited research team, right? You and us, like retailers who are trading, who are around you, will have a personal biasness towards the stock, a personal biasness towards everything, and they will not be able to make profit, right? So they will not be able to make profit from it. And now if we look, just have a very clear understanding, they will not be able to make a profit, right? The research team, they have a very personal research team, and for talking about the main first, they have a large research team. So suppose if we give the idea about research team, so they will rank 1 out of 10, right? 1 out of 10. But if we talk about the large research team, they can range up to 8 to 10 out of 10. So 8 to 10 out of 10. So this is the level of research they do, and they are right, and they make profit in 8 of the 10 stocks they enter, because they have a large research team. And if you talk about the personal, there are only 10% in retailers who are making money. So it's 1 out of 10 retailers who are making money. So talking about the information, they don't have information. So retail investors don't get any usual information. Usually they don't get information, because if it comes on the market, the market will become saturated. So get the information very at the very last, when the market becomes saturated and they are not able to gain the most benefit out of it. But if you talk about the main force have the information. So just look at it. Main force have the accurate information, and they are able to make a lot of profit by having the information first hand, right? So once we have the information first hand, we can make an entry into the stock, and when the stock grows, when the news flows comes into the market, we will be having and making a lot of money. So they have the main force, the operators have the informations with them. So talking about funds, it's very small, maybe in lakhs or crores, but they deals in hundreds of crores, right? So talking about retailers in lakhs, in crores, but they deal in millions of billions of rupees. So talking about in rupees, if you just like lakh, they deal in lakh and crore rupees only, most of the retailers, but they deals in millions and billions. If you talk about the funds, they have a funds in terms of lakhs and crore. Retail investors usually lack capital and they have a big money. They deals in billions and millions, which can push the market, right, and make the stock price rise. If we talk about the continuity, we have talked about the retail investors continuity is very weak. Retail investors can only have a continuity for a 1 or 2 day, but they cannot push the market continuously. They cannot push the market continuously. So that's the main thing we have to understand. They have a very weak continuity in the market. If we talk about the continuity in the main force, it's very powerful. If we talk about the continuity, it's just one or two, right? So it's just one or they can make only two. But if we look at the continuity of main force, it is continuous. They can stand continuous and make the market grow to a continuous level. So these are the levels we are seeing. So just have a look. If we talk about the three elements which we have to look in the stock, so what are the three elements we have to look into the stock? So just let me know what are the three elements. Just look at this and what do you understand by all the three elements we have to see. So in trading we basically follow, right, in trading we basically follow what we follow three crucial factors. The first one is most crucial factor to determine entry and exit levels, right? First, the price, which is the most crucial. Just have an understanding. First, we follow the price, which is most critical, which we determine for the entry and exit of a stock. Secondly, what we follow? Secondly, we follow the volume to confirm the strength of price movement. We have been talking about volumes. Why do we look at the volumes? To confirm the presence, the strength of a price movement. When the volume is increased and there is a continuous hippie amount of volume, it has been a bulky volume, so we can confirm the volume, right, the strength of the stock pricing. Secondly, we have our time. The timing of entry and exit is essential for maximizing profit. So this is the things which we have to look. If we understand the importance of it, right, if you understand the importance of it, we will be understanding, by understanding volume, price, and time, and recognizing patterns, we can identify the opportunities aligned with the movements of main funds and big players to maximize the returns. So if we understand the price, volume, and time, so time comes at very last, right? The most important thing which we have to understand, the price plays a very prime importance, so will rank as one, and then comes the volume to find the strength of it, and then comes the time. So this is the mark we are seeing. The price plays a very important role, right? So just have a look. Whenever whenever we are entering into the stock, we are looking at the price first, and then the volume, and the timing of it, right? First we look at the price, it's making for position from 200 to 400, and then we look after the volumes, right? So if you want to rank it, first we will look at the price. So this is the first ranking, and this will be the second ranking, and this will be our third ranking, right? So this will be our third ranking, and this will be our second ranking if we look into it. So these are the levels we have to see. And now if we talk about, so we have our major clear understanding of it. Now if we understand where we want to buy the stocks and where we want to sell the stocks, to understand that we have to understand the W pattern which is occurring on the screen, right? The half W pattern. The left side of the W represents the accumulation phase by the main funds. If you talk about the left side, it usually represents the accumulation size of the main fund. So just remember that we are having at the accumulation size of the main fund, but we cannot enter there. We cannot enter there and make profit, right, guys? So just have a look. If you look at the left side, trading buying point, right? So this is the left side trading buying point, and this is the right side trading buying point. So where we need to buy the stock and where we need to sell the stock, please understand it very clearly and very precisely now. So first we will look at the left side trading buying point. So this is the left side trading buying point. If it comes to, this is the lowest point we can see, and this is where we see the right side trading buying point. So just understand this point. We will explain with the more examples how it can be beneficial for you. And left side trading selling point is at this point, which makes the highest point for a stock. And if it comes toward this level, we need to sell the stock. So right side, it will be a trailing stock. When the stock starts falling from the highest point, we have to sell that stock. So right, so we have to buy at this side when the main fund starts making position, right? Where, and this will be the accumulation of the main funds, and usually the bottom of the W is where, so at the lowest point, this is the point where the most of the retailers often panic and exit. So when the retailers will be panicking and making an exit, the right side of the W, just look at it, the right side trading buying point is the main buying point, right? Push, where the market is being pushed up. So here the market is being pushed up because this will be your lowest point where the most retailers will make an exit, and here again the push will be coming up in the market. If you look, driven by, it is driven by volume and sentiment both. This is where you can strategically make your entry, right, and ride the wave of profit. If you want to make money, and you can just enter at this point and ride the wave, so this will be your selling point, right? And if it reaches the highest point and once started falling, you can just trade, your right side trading selling point will be there. So if you understand, so just look at it, left side buying point, if it's a lower price, right, we have a lower price and low success rate. If you buy at this level, we have a lower price but a low success rate. But if you look at the right side trading point, it will have a higher price but a high success rate, high price at a high success rate. So what do you want to do? Obviously you will be having a right high success rate, you want to drive the high success rate, so you just go buying at this level, so you can drive the profit and have a very good success. Now just have a look. So this is the most important thing which we are about to discuss, right? So this is the most important thing which we are about to discuss. Just be ready for it. So key point for Zio Yang warehouse building. So just have a look how the main funds enter the positions and make profit from the stock. So first of all, we have a relatively low, no main funds enter the market in the early stage. We are seeing when there is a relatively low, right, no main funds enter in the market in the early stages, there is a slowly declining going on, right? When geoengineering is looking and building a position, the kill entry is relatively continuity good. So also the trading volume is significantly larger before its large quantities and piles. So just have a look on it. If we understand it more clearly, so just have a look. When there was a not a presence of main funds, right, there is no presence of main funds here, so just I'll add this up. So there is no presence of main funds here, and the stock was decreasing, it was decreasing. But once the main funds have started building up their positions, so there has been continuity in it. So this is the second method. There has been uh, continuity in the stock, and the volume has also been piled up, right? The volume has also been piled up here. So just have a look, the volume is been piled up, the trading volume has significantly larger than before, right? And it's a large quantities and piles, so it's in large quantity and piles. Now coming to the fourth, have the opportunity to be active played previously sectors, current active sectors, or sectors that will be active soon. So have the opportunity to active the played previously active sectors, current active sectors, or the sectors that will be active soon. So we have to understand. So the sun accelerates at the bottom, out and rebound. So just have a look. The sun accelerates out the bottom and rebound. The stop loss is the low point of the day when the big sun accelerates to buy, or the low point of the correction and stabilizing. So just have a look. If you are making a stop loss in a stock, if you want to have a risk management, just make sure that you are making a stop loss at the position where the big players are and started making entry. So if you want to have a stop loss, just make at this level, right, at the price of 200. So if you look about the last point of it, the K line after acceleration forms for selling point. So K line after acceleration form for selling point. So this just have a clear understanding. K line after acceleration form for selling point. Just have a look. So after they have increased, it indicates the selling point at this level. Once the operators are there, the big players of investors, you can just make an exit at this level. So you will be usually having a profit of, operators will be having a profit of 3 to 5x, whereas big investors will having a profit of 2x returns, and retailers can also make money by 10 to 20%, right? So these are the major factors we are understanding here. Now just have a look. On it. So if you talk about the location, how the main funds enter and make the market move, right? So how the main funds are entering, so just have a look. This is the left candle which is appearing in a bulky manner, but we don't have to enter it here, because what will be happening here, the maybe it is created by retailers or the big investors, this line, but if we look at the continuous increase in it, we will be seeing a continuous increase and making a formation for it, and the price will be increasing much higher, right? So the price will be increasing at much higher. So we have to make sure that whenever the continuity is here, then only we are making our position and taking the most benefit, where you will be having our most of our profit. If we look at the 31st slide, this is the last slide for prerequisite for shipment. So this is the last slide. Just make sure you're understanding it very quickly. The main force have entered the market, right? First of all, the main force will be entering the market. Secondly, the market has risen. I will make you understand with an example from the trading view. Just look at it. The main force have entered the market. So this is the position where main force have entered the market, right? So I will just make sure the main force have entered the market at this level. So just make me sure. I will be putting up the arrow and make you understand. So at this point, main force have entered the market, right? So this position, the main force have entered the market. So just I will write it up and make you understand clear by one. So what will be having a first point, right? The main force entered the. So here the main force is entering the market. You have understand by the PPT which we are giving it to you. Secondly, we will see the market has risen. So just have a look. From 190 to 200, the market has risen. So just we will make where the market is rising. From this level to this level, the market is rising continuously. So from this to this, from 200 to 400, we'll just write the market has risen. So this will be our second point, right? The market has risen. So just have a look. The first, the main force have entered the market. Second, the market has risen at this level, right? What we have in a third line. So just have a look. The main force made a profit. So obviously the main force at this point is having a good amount of profit. So just have a look. This is the point 3. The main force have made the profit. So this is the main force where they have made a profit at this level, right? They have started making profit. but they will be exiting at this point. So the main force have made are at profit at this point too. So the main force have started making profit now. If you understand, right, so they will make their profit at this level, and the market has rising continuously due to the main funds here, and it has been pushing again to the higher level. So just make sure you are understanding that the market is rising here. So looking at the fourth point, if you see, there has been clear upward trend, right? There has been a clear upward trend. So we can see there has been a clear upward trend and a continuous increase in the price of stock. So this is the 4 point which we have covered for you today. So first we see the main force is rising. So just have a look. The main force enter the market at the level of 200, right? So we are seeing a cost of operators here. We are seeing the cost of operators which is at around 1 200 to 400. Secondly, we see the market is rising due to the continuity in the stock, and we are seeing the heap of volume, the bulks volumes are present, so we can confirm the presence of operator here. Thirdly, we see the main force have made the profit. What are the main force? The operators have made the profit at this level, and here at last we see they have there is a clear upward trend. So we can understand the main force have entered, they have disrupted the market, puts the stock, and they are making a clear profit from market, right? So what we see, operators usually go for 3 to 5x returns, not less than that. They have a long term vision, whereas if you look for the big investors, they are going for 2x returns. So they want to make their money grow by 100 to 200%, right? And whereas operators go for making money of around 300 to 500% returns. And retailers, they can also make profit by 10 to 20% by riding the wave of market sentiment, and where the big investors are present along with the operators and pushing the market. So these are the things which we have covered for you. Just make sure you are understanding each of the concepts, right? For so what we have discussed, we will just wrap it up and close the session for today. So for today we have discussed about the leading small bullish lurk is the lurking to build position. We have talked about how main force act, and what how we can identify the continuity and confirm the presence of main funds, right? And then we can look at the volume, we can look at the volume and look at the heap amount they are creating, and confirm the presence of main fund. So what are the market push move? This is the funding drive. So these are the things which we have done it for today. So let's make sure I will be assigning you a homework for tomorrow, right? So make sure you are submitting at least 3 of the stocks and identifying where the main funds are acting, right? How the covered position is being made, and send it to my assistant. Tomorrow we will review it again and make sure you are understanding each and every concepts we are delivering it to you. So till next session, uh, be happy, stay profitable, happy investing.